Good afternoon, everybody. Welcome to the Moving Markets Podcast. It is Friday, December the 12th, 2025. And obviously, because you're not on live with me, because I'm just recording this, by the time you're listening to it, you'll know exactly where the market ended. But it's about 10, 11 minutes prior to the close of trading today. And I am going to kind of take this right through the close or get awfully close to it. Honestly, um, I don't have a lot to talk about today simply because it's like, what do you talk about? I mean, really, when it comes right down to it, what do you talk about on a day like today? It's a little bit hard for me to not get off on some really massive rant. And I mean full on rant about the lunacy and the insanity of this sell-off today. It just, I mean, you could talk to 10 different people at the end of the day today, and probably with a look in their eyes that tells you they're making stuff up. With a look in their eyes that tells you they're guessing or they're trying to sound more intelligent than they really are about the specifics. Maybe not generally less intelligent. I'm not trying to, beat up on anybody, but talk to 10 different people and you will be given 10 different reasons, or at least variations of reasons why the big sell-off today. Now, the most common one, the one that I say variations because the one that most of them are going to have somewhat in common is going to be this narrative, which I personally think is so exaggerated. I don't. Part of me wants to say it's complete and utter crap. It's total BS. I'm gonna suffice to say it is severely exaggerated, and that is that AI is in a bubble that somehow, some way, um, every company that's involved heavily in AI is overspending with no proof, no results of any kind of return, or at least they're not going to get their money's worth. It's this weird situation where I don't believe the narrative actually matches up with reality. So, we started out this week. We started out having a good week. I mean, things looked incredibly promising in the early part of the week. You had Monday was down a little bit, Tuesday and Wednesday, or I'm sorry, Monday down a little. Let me back up. Let me back up. I'm getting off a little bit. We've had a back and forth week that didn't start real super promising, with the exception of the Dow Jones Industrial Average. If you look at the Dow, you had a little bit of sell off on Monday, a little bit more on Tuesday, and then big Wednesday rally, big Thursday rally. And about an hour to an hour and a half into today's trading session, it looked like you were going to have a big rally to end the week. And then suddenly, and when I say suddenly, here we are 7 minutes before the market closes. And I still cannot tell you, and nobody can. I promise. If they say they know the reason, I'm telling you right now, anyone who says they know exactly the reason why this happened is making stuff up. But right here, you can see it like clear as clear can be right here. And I don't know exactly will that tell us what time it was if I get on there. There we go. What time of day was that? So that was at approximately 10:48 Eastern time. Okay. 8:48 my time. Stock market had been open for an hour and 18 minutes. And the Dow Jones, which was now the NASDAQ was down already. I think the S&P was really flat. And all of a sudden, the Dow Jones Industrial Average just went off a cliff. Just went off a cliff. And it tried to make a little recovery for a good portion of the day. And then it slid really badly again, got almost back down, not quite, almost back down to the session lows. And now it's mounting a little bit of a comeback with 6 minutes here left, but I'm not holding my breath in any way for an actual, well, I mean, look, there's 5.5 minutes left to trade. Right now, as we speak, Dow Jones Industrial Average down 256 points. Whether it comes back 30 or 40 points from there, or whether it drops another 40 or 50 points. I don't know that it won't finish exactly where it's at and be approximately in the spot that it's sitting in right now. But it's just look, I'm not, my frustration is not a worry about any specific trade that we have open. This is good for some of our collar trades. CoreWeave is getting pummeled today. It's down almost 10%, and it's been down even farther than that earlier. Applied Digital started the day in positive territory and is now, after being in positive territory, it is now um, down almost 9%. And CoreWeave just went back over the 10% down mark. So, it's just it's ugly. But from a collar trade perspective, this is good. I mean, I'm not in any way upset about the balance of my portfolio. Now, granted, my portfolio balance is down today. Nvidia's down 3.5%. Micron's down almost 7%. Palantir, let's see, I had it a second ago. Palantir down 2.5%. Amazon down 1.75%. AMD down 5%. I mean, the market's getting kicked in the teeth, plain and simple, just absolutely kicked in the teeth. And some of these tech stocks are just getting blasted. And it's all this narrative about AI and people being skeptical about the valuations of AI. And I just, it flies in the face of what some of the very same people, this is the part I have the hardest time with, some of the very same people as little as a month ago or less, as little as 2 weeks ago, some of the exact same people were saying we are just at the very beginning of AI. This is like the dot-com era in 1995, not in 99 and 2000, 2001. This is like we're just at the very beginning of what is going to be this amazing, unbelievable explosion in the world of AI, and it's just going to get better and it's going to be incredible. It's those same people in some cases, not in every case, but in some cases, that are now saying it's all overvalued and Oracle. I mean, what did Oracle do? All they did, they missed on analyst expectation for revenue, but everything else about Oracle's report was great. And the CEO comes out the next day and says something to the effect of, "Yeah, we're not worried. We're not worried. We've got a lot of things going good." And yet Oracle has been bombarded yesterday and again today. Broadcom, after market, when Broadcom was reporting their numbers, when their numbers came out and they were reporting them, Broadcom was up in aftermarket trading when their numbers, basically hit the wire and were posted. Broadcom was up. And today they're getting beat up to the tune of $45 a share, over 11%. It it would make more sense to me if there was validity, and I don't think there is. This is my opinion. Look, it's my opinion, right or wrong. You can disagree with me, but days like today are not hard for me because the market is down. It's not hard for me because I'm negative a little bit on some stocks that I was positive on yesterday. It's not. It doesn't upset me because um, I think something should be going one way and instead it's going the other way. None of that upsets me. I'm not right every time. I don't mind being wrong on some things. What bugs me is the inconsistency of it, and what, in my opinion, is such a severe lack of logic behind what's causing the move. I believe 99.9% of what's going on today is being generated by algorithms that were preset. The people that wrote these algorithms, the people that designed them, the people that programmed this stuff, they were gone for the weekend yesterday afternoon when the market closed. They haven't been around. They haven't been looking. They're on a beach somewhere for the weekend. Don't care at all about the information that they put into these algorithms or the way they train these algorithms. And the algorithms were set such that if there was negative news at all about Oracle 2 days ago and Broadcom yesterday at the end of trading, the algorithms are set to sell everything, anything and everything that is in any way related to an AI trade. And that's what you see happening today. It's algorithms driving trading that is based on such utter and complete BS unless you buy into the narrative that the investment in AI and the money companies are spending on AI is a big waste of time. And I'm sorry, I'm a long ways away from that. Do I think AI is perfect? No. Do I think every company that's involved in AI is going to go through the roof in the next couple of years in terms of their stock price? No. I'm not a naive person. I don't think all that's going to happen. But to act like the investment right now in AI is not a wise thing, I don't know where are you spending your time? How far up your rear end is your own head if you think that a company should not be spending money on AI? Now, yeah, you can have conversations. This is where I get out of my depth. You can have conversations about how much they're spending. Are they spending enough? Are they spending too much? Look, have all the conversations in the world about that. And honestly, you're a little out of my league when you start having those specific conversations. But the conversation about whether or not you should be investing in AI, it doesn't make sense to me that there's even a conversation being had. I'll tell you a quick story and then I'm going to wrap up because what's happened has happened. Here's where we finished today. And look, our Nvidia trade is down, our Palantir trade is down, our Amazon trade is down, our Micron trade is down from where they were at yesterday. I would be honest with you, if I was even the slightest bit, I mean, even a tiny bit worried about any one of these trades not being profitable in the very near future. And when I say the very near future, I think by the end of this year or no more than a week or two into next year, I think every one of these trades will be profitable, and I think they'll be nicely profitable. Um, so I'm not worried about that. And I would be honest with you if I was and tell you what we needed to do to adjust if I was. But tell you a quick story. Many, many years ago, when I first got into trading, Amazon was already a well-known company. Amazon was already a publicly traded company. And for a number of years, I resisted buying shares of Amazon because Amazon never turned a quarterly profit. They were always spending more money than they were taking in. Now, I wish I would have had a better understanding of how some things worked back then, because I would have paid more attention to what Amazon was spending money on. I would have worried a lot less about the fact that Amazon was spending more money than they were bringing in. I would have cared a lot more about what it was Amazon was spending money on. They were spending money on their infrastructure. They were spending money on warehouses. They were spending money on their website. Amazon was aggressively spending money for all of the right reasons. For all of the right reasons. And I didn't see that. And I resisted and resisted and resisted and resisted. And it almost felt like one day, this wasn't really the case, but it almost felt like one day I woke up and Amazon was worth a couple $1,000s a share. This was before they did like I think a 10 or a 20. What was the last? I'm curious now. I'm going to type it in while I'm talking. I'm going to say Amazon stock split history. I should have looked at this before I started the podcast today. Okay, so Amazon 4 times has split their stock. 2-for-1 in June of 1998, 3-for-1 a year later, less than a year later in 99, they did a 3-for-1 split. Another 2-for-1 in 99 and a 20-for-1 split in 2022. 20-for-1 split in 2022. And what's Amazon stock trading at right now today? Right now, today, Amazon is now worth $226 a share. And that's after a crappy day, a little bit of a sell-off. I got to tell you, if I would have bought the shares of Amazon when I had a chance, Holy smokes, I would have been. Ah, I kicked myself many, many, many times for not doing that with Amazon. Now, lest you think I'm a complete and total idiot, I did buy shares of Netflix when they were $26 a share. Over, I think 20 years ago, 20 years ago, I bought shares of Netflix at $26 a share. I liquidated Netflix a couple years ago and I regret that, but I made a lot of money on Netflix, and I mean a lot of money on Netflix. So the Netflix story has a much happier ending than my Amazon story. So look, I feel the reason I told the Amazon story is because I think there are some of these companies, and I'm going to tell you specifically Palantir, um, APLD, CoreWeave, some of the chip manufacturers, even the ones that have had some really, really big runs like AMD and Micron, Marvell. Palo Alto Networks is a little bit different. I put them in with Palantir in terms of the stuff that they do, or more similar to Palantir. I believe some of these companies, we're going to look back 3, 4, 5 years from now. We're going to see multiple stock splits. We're going to see um, a history that looks something similar to Amazon, where not every quarter are they going to come in with numbers that absolutely blow out the analyst expectations and have everything just entirely perfect. But to think that there's this massive AI bubble. Yes, I know some valuations are high on some companies. You know, valuations for Amazon for a lot of years were way, way higher than the market averages, way higher. And people still kept buying Amazon and still kept making a lot of money with Amazon. I think Amazon is more of a value stock than a growth stock now, although that could change because they're heavily invested in AI with Amazon Web Services. So here's the point of all of this. Today was ugly. I hated watching it, and it kind of ticked me off, like I said, because of the illogic of it. I hate algorithm trading. I really do. I would probably feel different if I had the brain of a computer programmer and I could sit down and write algorithms. I would probably feel much different about it. I don't have anything against the individuals that do it. I think it's a bad thing for the stock market that you don't have human beings in charge. And I think if you allow computers to do too much of the work, you end up with days like today. And look at this. And here's the big headline: investors rush out of AI trade. I'm telling you, idiots, idiots. To all of a sudden get spooked and think that you shouldn't be in AI trades because Oracle missed on revenue, because Amazon, or not Amazon, because Broadcom reported good numbers, but may have had some parts of what they said that weren't exactly what people wanted to hear. It just, in my opinion, it's so foolish. And it tells me that even the people writing the algorithms should maybe not be involved in the markets at all. Um, here's a headline: Broadcom tumbles 11% despite blockbuster earnings as AI angst weighs on Oracle and Nvidia. It's not just speculation, it's stupid speculation. It's people just being too afraid to be in the stock market. And their fear has a tendency to bring down everybody. Okay, I have ranted enough. I expect next week to be a much better week. Have a great weekend, everybody. I'm going to wrap up right there. I've said more than enough. Hang in there. I think from a collar trade perspective, we're in fantastic shape. A few of our spread trades are down, but I am so not worried about it. I should mention also Lululemon looking fantastic, although the option prices got a little squirrely right at the end of the day today. And Micron, we're right in between the strike prices of our long put and our long call, which is the right spot to be going into the earnings report in the middle of next week. So I'm not worried about these trades at all, not even a little tiny bit. So hang in there. Have a good weekend. We'll be back next week. Thanks, everyone. Bye bye.